guys, if you've been following me for a little bit, you know that I was a professional trader on the New York Stock Exchange, and I've been just kind of giving out different videos on what stocks I think are going to be the biggest movers during the week on Sundays, whether it's going to be on the call side or on the put side if you're trading options. But now I kind of want to show you what I'm looking at, what these charts mean, and what types of indicators I use, because this whole graph that I have going on here kind of looks like a really bad coloring picture from a little kid, but these will really help you understand when to enter and exit stocks. Okay, so let's dive right into this. This gray line right here is the RSI, Relative Strength Index. And you can see percentages over here. Anything above 70%, I would say is overbought. That's when stocks are starting to get a little bit, heavily weighted onto the call side. So I would probably look for a little bit of a sell-off. Maybe it overextends and you can see this start to get a little bit red. That shows you it's really overbought. And then next thing you know, when it's overbought, they sell off. This is a pretty extreme event here because it's a square look showing all the sells, buys and sell days on the daily chart here over the course since January 1st all the way to present day. So there's been a lot of volatility in this stock in March and May, but I'm using this stock for educational purposes. And then when you want to look at this RSI, basically above 70% overbought, below 30% oversold. And that's when I would start taking a position for longer term expiration contracts or a weekly play. Maybe I'm looking for a quicker reversal here from this 198 all the way to this 225. You never know. So RSI really going to show you when things are oversold and overbought, and then when they might start to reverse. Another thing I like to look at is a TTM squeeze down here. TTM squeeze are these colorful red and green, dark green, light red, dark red. And this is just going to indicate pressure. There's a lot of call pressure, a lot of buying pressure on the stock. It shows me when things are going up. And it starts to fade off a little bit when there's not as many buyers or it's not as bullish as it once was. And then it starts to go dark green for me. And then I know right here, similar to the RSI, overbought, pressure starting to sell off. I think things are going to start tanking. So, hey, maybe I'll take a put option. Maybe I'll sell out of my call position and wait for a better entry. How do I know when a better entry is? Well, the RSI, when it starts to get sold off here, oversold below this 30%, and then it goes even lower here. So that's an even better position. You just follow along to the RSI and the pressure here. So when it starts turning red, that shows you that the sell pressure is now taking control in the stock, and then it starts to get really, really red. And then when it starts to go lighter red for me, it's going to start reversing on the call side. So it's very big on the reversal patterns, and it's relative to the RSI. So RSI, TTM squeeze, something that is really correlated to how the stock price is performing. And that's how I try to determine my entry and exit points. Let's go upstairs to this. We got all this blue stuff right here is all volume. Volume is one of the biggest things in stock price trading. You're going to want to see how things are performing with how much volume they have. If they have a lot of volume, that means that usually it means that they are going to go one side with a lot of volume. And it's basically confirming that move is a good move and a solid move because there's so many people on one side. So you can see there's a lot of volume here on the sell candle, but it's also creating a hammer candlestick pattern. So it's going to show a little bit of a reversal here. It kind of came down, but it didn't have as much volume the next day. So if there's not a lot of volume on a sell day, when there was a humongous amount of volume, it looks like on the daily chart here, that's kind of a sign that it's starting to fade out. Maybe it's getting a little bit weaker on the downside. So maybe there's some buyers coming in at this cheap price, especially when it sold off from 283 all the way to 200 or 192. Wow, what a hell of a sell off. But anyways, let's go right into these white dots. These white dots are called parabolic SARs. They also show trend flips. When they're above, that means the stock price is trending down. And when they're below, that means the stock price is trending up. It's just something to show me that there's a confirmed, switch here coming in pretty soon. This is once it starts getting closer to these candlesticks, things will flip. And then it shows you a true trend if it reverses. And then same thing over here. If it starts selling off, it'll reverse. And this one above will show me that there's some downward pressure. And then it's just they keep flipping on and off based on how the stock price is performing. Then I have these purple lines. These are called the Bollinger Bands. There's a bottom band, a middle band, and an upper band. And all this shows me is just basically a range of where the stock price is going to be trading from. As you can see, it tries to bounce out of this, but it comes right back in. It bounces out of the Bollinger Band, lower Bollinger Band here, bounces right back in. It's trying to ride out of these, but it always tries to stay within these bands because it tries to stay within a range. So I like to look at this based off of if things are overbought or oversold or where they're going to move next based off of how they're performing on their Bollinger Band. So I like to trade within these. So if I'm in a call here and it bounces out of them, I'm like, all right, I should probably take profits at some point because it's either going to consolidate or sell off. So it sold off or consolidated a little bit, started to trade within its band, and then it did that forever till it really broke out, and then it was oversold on the TTM Squeeze, RSI, volume, and parabolic SARs, and then it flips. So I really like to use the Bollinger Bands to stay within a true range on the stock price. And then finally, I just have these simple moving average. Oh, not finally, I lied. There's the red, most important one, the red VWAP. I use red. You can change it to whatever color you want, but I use VWAP. The volume weighted average price is probably the biggest indicator that every trader uses. I can't believe I almost missed this one, but basically this stock will react off the VWAP and show you which direction, and it'll react fast. You'll see a lot of buyers or a lot of sellers and a lot of volume and a huge move every time it tests this VWAP. So it'll test these and be really fast. You'll see how volatile it gets when you're testing on the VWAP here, and more so when you're looking at like a 5-minute time frame or a 1-minute time frame. So all of these indicators are consistent with every type of time frame you look at. So you can look at a daily chart, see how the stock is performing every day. You can look at a 4-hour chart. I'm a big fan of the 5-day, 5-minute chart, so I can day trade off the 5-day, 5-minute and the 1-day, 1-minute. But you'll see right here. So things are breaking out above this VWAP. They test the VWAP a lot, they bounce up, and then once there's a sell candle, you know it's probably going to test that VWAP. So VWAP is one of the biggest indicators that stock traders use on the street. It's been for a long time, and I don't think that that's going to happen. I don't think that's going to go away anytime soon. So VWAP is a big one you should definitely have on your charts. And then the last but not least, I just have the simple moving averages. I don't really use the simple moving averages that much, but I have the pretty standard 55-day, 21-day, and 8-day moving averages. So just basically an 8-day moving average of the stock price, a 21-day moving average of the stock price, a 55-day moving average, just to see where they'll bounce off and if they're going to gravitate towards those averages prices. But that's basically it. I really use the volume. I keep it clean. I keep it consistent. There's a ton of indicators you could possibly use, but these ones have really, really helped me over the years. And they've really created, once you kind of figure out how stock prices are trading and you recognize chart patterns, you can really become a great trader just off of these simple indicators. So this is going to be a 2-part video. I'm going to make another video on how to actually set these up, but I wanted to describe to you on what they were and kind of what they did. And if you have any questions, you can hit the comments below. But in the future, I'm going to start creating not only stock watch lists, but I'm also going to be showing like how different chart patterns are set up on why things trade the way they do in different patterns. Because patterns on the stock charts are everything. If you can recognize bull flags, bear flags, pennants, falling wedges, etc. There's everything. Everything is mostly in the charts and technical analysis. You really got to recognize those patterns in order to play those setups for entry and exit points. So stay tuned to the next video. I'm going to show you how to set all this up from scratch. And then in the future videos, I'm going to show you how to recognize chart patterns and really start gaining a perspective on when to enter and exit stocks. So this is just the beginning. So let's get to it.